Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney. Today is another episode of the Mortgage Guy Podcast. Today we're going to make it short and sweet. We're going to give you a market update to kind of address what's been going on with the Fed, what's going on in the market, and answer some questions that you're probably already getting the answers to, but you might be able to save yourself some trouble from contacting your lender or being misled out there. So the big thing here, let's talk about the Fed rate cut, all right? So I have gotten blasted over, the last 2 or 3 days about the Fed rate cut, what's going on, what kind of impact did it have on the market. Well, the Fed funds rate, remember, is a bank's ability to borrow from the Fed at the discount window. It's not a direct correlation or impact on mortgage rates themselves. However, obviously, it does help us. Okay, so typically speaking, when there's Fed announcements that there's going to be a cut in the rate, we will see a decrease. However, like I've told most, our industry is very, very speculative. All right, we react to industry news just when it's announced or there's a whisper of a headline, you name it, we move, we react. Okay, we don't wait for the action to actually occur. Okay, so what do I mean by that? We've actually seen a significant rate drop over the last, 3 weeks, month, right? I've talked about it on the last podcast before, and I think I've mentioned this. And we reacted and got a nice rate drop because of the announcement that the Fed was going to be meeting in September. And the expectation was we're going to get a 1/4 point rate drop back then. And we got another rate decrease in the last couple of weeks because the expectation was now that the Fed might get aggressive and do a 1/2 point rate cut. All right. So our market and our industry has kind of already adjusted to this. So when the Fed actually comes out, make their announcement of the 1/2 point rate cut that they did just the other day, we didn't see much of a change, if any. Actually, the day after, pricing worsened a little bit, and then it's improved again the day following. But the reason is because we've already reacted. And the general public typically doesn't know this. They just immediately think, hey, Fed cut the rates, time to go shop for that house again, or look into a refinance, which highly suggests doing so because rates are significantly less over the last couple of weeks than they have been in the last 18 months. So I do suggest contacting your lender to see what the rates look like. But we have already kind of felt the impact. Now, will we continue to see a slower slide down? I believe so, yes. Can't guarantee that. Anything can throw that off a little bit. But I wanted to let you know that it's already kind of adjusted. So after the 1/2 point announcement, there might not be much difference. That's all. My concern actually was when they were coming out that we've adjusted the market so quickly on just the news of them meeting and the potential of an aggressive rate cut of a 1/2 point that if they only cut a 1/4 point, my fear was that we might have saw a rate increase in our industry, even though the Fed actually cut. So it's very odd how that works. But again, our industry is very, very speculative. The market is very, very speculative. Any news, any headlines that comes out, we react immediately. So just a heads up there. If you're shopping lenders and you're getting some of that similar news, that's why. But the good news is rates are at the lowest level since February of 2023. That's huge, right? So we've went a year and some change with increasing rates, and we're finally seeing some good relief over the last month or so, and that's great news for everybody. As we're hoping by the end of the year there is another potential rate cut here. So that brings me to something, and we've talked about refinances in the past, and we'll dive a little bit deeper into specific loan options for you, which we've touched on in the past, but like really, really diving into them. But the share of mortgage-free homes hit a new high recently. And a big reason I think is, in 2020, 2021, people got in those refinance position with those 2s and those low 3s, and they took advantage of it. They haven't moved, right? They might be paying extra on their mortgage, but it hit an all-time high. 39.8% of U.S. owner-occupied, key, owner-occ, okay, housing units are now mortgage-free, up from 38.5% in 2022, making a new record in the U.S. So, that's huge. And you know what? If you want to be a part of that, first off, you got to own a home. Second, a great option, guys, is a lot of people talk about paying extra, and I'll have Justin drop a link into our prior podcast with Ray from GemCap. Great way to build additional equity is using that GemCap system with the biweekly pay structure and building equity faster, paying off your house significantly faster, And there's so many cool options with that. If you're interested in that, give me a holler. All my contact information is along the banner at the bottom of the screen, and we can get you set up with that. And maybe you can get a piece of that and become mortgage-free like the other 39.8% of the U.S. owner-occupied households. And that could really free up some disposable income to allow you to do some other investing yourselves and plan for retirement. The last odd thing is more of just a market announcement. So, I didn't think that this happened as often today, especially with the CRA, the Community Reinvestment Act, that most banks specifically are being held to, putting money into certain accounts to help lend to certain communities that might be underserved. Okay, but Ocean First is a New Jersey-based bank, and they agreed to pay $15 million to the Department of Justice due to a redlining settlement. So again, redlining, what that is I don't want to use the word ignoring, but not lending or not focusing some of your lending opportunities to certain communities. Okay, so it failed to provide mortgage lending services to predominantly Black, Hispanic, and Asian neighborhoods in Middlesex, Monmouth, and Ocean counties. The Justice Department announced this past week. So the Office of the Comptroller of the Currency flagged the bank to the DOJ in December of 22. So it took quite a hot second there for them to get through this. And the regulator found that Ocean First violated the Federal Housing Act based on analysis from an October of 2021 fair lending examination. So we're talking 3 years to get that moving. So again, guys, the CRA, the Community Reinvestment Act, has been a big thing, and honestly, it's been a little bit of a challenge for banks. Again, we're an independent mortgage banker. We're not have to adhere to this money investment piece. But what it is, they're allocating certain assets and capital into specifically giving down payment assistance, doing certain special credit programs and stuff like that to certain segments of the market, which is a challenge because you're reallocating some of these funds that could be used, and it's a little bit higher risk loan. But ignoring specific communities is unbelievable. I don't even know how that even happens. I mean, if you have a pulse and a credit score, I'm going to lend you money. So I'm not real sure what they did to get that kind of attention. But hopefully other lenders out there aren't doing this. I found this very odd in 2024 that actually occurred, even though from findings from 2021. Anyways, so guys, in a nutshell, rates have moved. Okay, take a look into where you're sitting at right now on your mortgage. If you closed in the last 18 months, you might be in the 7s. It's a great time to refinance. Do I anticipate industry rates and market rates to drop a little bit more over the next 6 to 9 months? I do. Again, a lot of things can turn that apple cart upside down. There's a lot of stuff going on in the world that can mess with that. So take a look where you're at. You may want to take a peek at the refi now instead of waiting in the hopes that they drop continuously over the next 6 to 9 months. But who knows? All right. It might be right for you now. It may not be. But if you do, all the information is right here at the bottom of your banner. Give us a holler, and we'll see if it's right for you right now. All right, guys, make sure you subscribe on YouTube. Check us out on Apple Podcasts and Spotify. We'll catch you all next week with another market update.